But when it comes to higher oil prices and the ongoing war between Iran and the U.S., we've already seen the results here in Japan as well. The June core CPI coming in at around growth of 1.6% year on year. This is accelerating from the previous month. This a lot to do with just higher oil prices, and it will factor in the BOJ's policy decision, which of course we have next week. Take a look at how markets in Japan are opening, because we continue to watch the Japanese yen very close to that 164 level against the US dollar. We're talking about weakness that we haven't seen since 1986, despite the fact that we continue to get all of this rhetoric from the government and from authorities about potentially having to tamp some of that volatility. You can see the Nikkei now losing more than 1%. The topic's also losing about 1%. We're watching the JGB space very closely as well, because we have seen that sell-off with yields rising higher. The 2-year yield actually at the highest level since the 1990s, given that the BOJ rate hike expectations have been brought forward, given some of the reports that we've seen in the last few days. But at the same time, the Japanese yen really not budging. Take a look at how South Korea is also opening. Of course, we're watching everything to do with tech, right? I mean, we had seen the big tech earnings. We just talked about some of these suppliers across Asia that could see a boost. The Kospi now losing more than 1.5%, while the Korean won is also seeing some weakness. We had seen a little bit of more of that volatility be reined in the South Korean market this week, at least with some of that support coming for these suppliers. But in today's session, we're seeing a little bit of pressure with SK Hynix down more than 2%. We have now learned that they're limiting conversions of their Seoul shares into U.S. traded ADR, so 2.5% of outstanding shares. So what that means is that we could see, Heidi, that premium from ADRs over Seoul shares still wide for a while. Yeah, the Japanese yen right now being pressured on all sides. We're talking about topping that 163 level against the US dollar. I mean, Heidi was talking about the Iran war ongoing that sent oil prices higher. Japan, a heavily dependent economy on Middle Eastern oil, that's not helping the picture. And obviously, we have this whole idea by investors and traders that perhaps the Bank of Japan is behind the curve. And then you bring in the other idea that you have to be a little bit more careful about the fiscal concerns in Japan, and you have the currency at a 40-year low against the U.S. dollar. We haven't seen these levels since, 1986. But when it comes to the stock market, we're seeing that upside, 0.4% for the Nikkei, given, of course, the semiconductor news we had overnight. We're in big tech earnings season. We're going to watch Alphabet, Tesla, others that could be affected here in the Asian session because of that supply dynamic with the U.S. Do watch out, of course, the chip makers, the Philadelphia Semiconductor Index jumping more than 5% overnight. We also do have a 40-year JGB auction today that SMBC Nikko says, okay, the size is relatively small. Plus, we had seen some strong demand on the 20-year JGB auction recently, so we could see a little bit of a boost there. Also, before I forget, the June export numbers out of Japan actually pretty positive in the export side, gaining 19% year on year, but also the trade deficit pretty big because of the weekend. Take a look at how South Korea is coming online.